Welcome back, everybody. Happy holidays 2023. I have Kimber White of RE Financial back today to have a little bit of a discussion so that we can kind of recap and review what's happened in the market in 2023, all the different changes that we've experienced, what we are currently experiencing, and then we're going to talk about some predictions for 2024. So again, I'm Milton Andrade with Compass. I'm the team lead at Polaris Advisors. And I have here Kimber White of RE Financial. So Kimber, welcome back.
Thank you, Milton. Welcome back. Happy holidays.
Yeah, likewise. We had a heck of a holiday party, didn't we?
Yeah, great holiday party. Great.
So 2023 has been an interesting year. As we know, sales have been down. And I know a lot of realtors who are experiencing, I think, at least a 30 to 40% decrease in the business. And that had a lot to do because sellers being locked in their homes with low interest rates. We've experienced a hyperinflationary market and high interest rates making housing affordability quite challenging throughout the United States, and even I'd say even more so in the Southeast Florida market where we spend most of our time. Tell me, we've had a couple of different ways for people to kind of cope with this market because prices have continued to continue to climb, right? So we've had housing prices climb, and then we've also had housing expense and just overall expense of goods and services, labor, materials, etc., just continue climbing as well. So people are under a lot of pressure and a lot of stress, but I think that we're getting everything under control. Tell me what you think.
Yeah, the 2023 was tough. I mean, we started off good. We thought the rates were low. We did not see, I don't think any of us saw that we would have the Feds do as many hikes as they did. I mean, I think it was 5 hikes this year that they did. And as fast as they did them. I think that was the real issue. On top of that, for Florida, as we know, our insurance, our property taxes. But with all of that said, yes, I'm down about 20-25% over last year, over 2022. But with that said, I still have a purchase market. People are still moving. The prices, they stabilized. And when I say the word stabilized, I'm a mortgage industry. I've been in this business 37 years. And I call it the outstripping of growth could not continue the way that we saw it continue. That was just
30%, 40% appreciation is not good.
It's not good because you end up going to have a hard fall. And we didn't. And in 2023, we now had a stabilization. We maybe had a 3%, 5% increase, but it was stabilized. And still, and I've told you this many times, 2022, there were more people who moved to Florida than anywhere in the United States with the largest population. And we're still going to have that growth, and we're still going to end up with that growth in 2023.
We have that consistent growth. It's still happening. It's more of a transformation of South Florida in general. But we have seen rates come down.
Yep.
Right. And the Fed has not made any cuts yet. So why have rates come down?
Well, the rates have come down because, everyone was expecting the rates to go up. They didn't. We still expected one more hike from the Feds. But now the Feds are saying, we're kind of done unless something happens that we don't know about. And they're expecting more rate cuts. They're saying 4 rate cuts in 2024. I don't have a crystal ball. You don't. So what it's done, it's made the market step back. It's made them breathe. It's now made us get back to reality, to where we are. So that's why the rates are coming down. It isn't this large cut. The rates are coming in because people had built in our markets. You hear about an interest rate. This is the biggest thing I think people don't understand is, oh my God, the Feds raised the rates a quarter. Well, the rates that the Feds raise is not always your mortgage rate. Mortgage rates could go down because we're attracted to the bond. But the difference, mortgage-backed securities, as they call them, the difference that we have is every lender had padded and put in, and investors, rate hikes. So now they're able to back off. We're able to pull back. The market's giving it back to us a little bit. Stock market's doing better. I mean, we've had the highest stock market we've had in recent history. So that's why we're seeing the rates pull back. But I will say this. Do not expect the rates to have, and this is what I'm going to say going into the end of 2023. If I give you any more advice, don't expect the rates to have these dramatic cuts for the first quarter of 2024. I think for the next month or two, you're probably at your max. You may get an 8 difference in rate, but you're not going to get where we came from at the peak, 8.125 this year, that we were at a 7.25 to 7.375. We're now in this 6.875, 6.75. You know, that's half a point difference. You're not going to get those large swings within the first quarter of 2020.
Much lower rates for FHA and VA, right? Closer to
FHA, VA, you're in the fives. You're in the interest rates in the fives. Yeah, FHA, VA, you know, you can do a VA in the mid to upper fives. You can do an FHA to mid to upper fives.
Well, I gotta say, I've shifted my business to focus more on life happens, right?
Yes.
People get married, people get a job, they move to town, they get a divorce, they have a baby, there's a death in the family. You know, there's a move. That's a life happens move, and my business has actually stayed consistent. But yes, definitely sales numbers are down because of that affordability. But I think now with these rates coming down, investments start to cash flow a little bit better.
Yes.
You know, there's a lot of sellers out there, or would-be sellers, who now are pricing out their new purchase for the more space that they need, or for the less space that they need, right? But now they're willing to sell their home, and so I do expect inventory to climb towards especially the spring selling season, March, April, May, June, and we're seeing more choice. But and I've heard you say this as well, would-be buyers, get off the fence and buy right now, because rates have gotten more affordable and you still have a lot less competition out there in the market. I am going into some multiple offer situations, but for the most part, we are many times exclusively the only ones negotiating with the seller, as intentional sellers, serious sellers are at this season right now at Q4, you know, and intentional buyers who are really looking to put together a deal. And I've had huge success for clients, and it's even been more of a bonus, because since going into contract and less than 30 days ago, rates have slipped, I think almost a point. And so in there, I'm sorry about that. It slipped in their favor. So hold on one second. And we're back. Sorry about the dog. But yes, like I was saying, prices have gotten a lot better, affordability has, and things are moving. I think 2024 is looking up. And as inventory starts increasing, there will be more choice, there will be more affordability, and we're in an election year, so it's going to be interesting, right?
But yeah, but one thing I want to go back and use is, there's going to be more choice, there's going to be more affordability, but all of those fence sitters, just like you, or that are sitting there going, I'm waiting, those people are going to be in the market. So now they're going to drive prices up. You're going to be back, not to the bidding wars like we had 2021, but you're going to get back into it. One of the things in 2023 I wanted to point out is, for me, I did less units, number of units as far as sales, but I did just as much dollar volume, which lets me know that the market is still stable here and it is increased. And I think that's important to let everyone out there know, for me, because I was just going over my numbers today. And I'm like, wow, I did almost the same dollar volume with 30 to 40, 20% down over last year, because that's the increase we had in 2023 still in our market and value.
And I would say that we've seen some price relief even on rentals, because a lot of the new construction that is hitting the market, at least in our area, is rentals. And so there are more units available overall, but much fewer units actually available for sale, though the trend is getting better, and I think we're heading into more of an even market. Tell me about the programs that not only has the Fed begun to alleviate some of these affordability issues, but what other lenders have, Fannie and Freddie, I remember you were mentioning a program, not just Hometown Heroes, because apparently
Yeah.
there's more money, but
There's actually there's money and Hometown Heroes still, which is Hometown Heroes is 5% down payment assistance. FHA conventional. What is a conventional loan? It's anything that is Fannie Mae, Freddie Mac. Look it up and explain that. FHA is a government backed, VA is Fannie Mae government backed. So I want everyone to know that. But there is a program under a conventional program which gives you up to $6,750. First time home buyer, no income limitation. Broward and Dade is the markets that we are. There's demographic pockets and it's Fannie Mae. It's not Freddie. This is Fannie Mae for demographics. And there's like a demographic market, and that is Broward and Dade County. $6,750 for closing costs and or down payment assistance. So
wow.
it's either or. And
Everybody qualifies.
And it is a grant. It is not something that you got to pay back. You got to keep your house a certain time. It's not baked into a rate. It doesn't mean a rate. It is a regular grant, period. Said done.
And is that from the government?
That is from backed by Fannie Mae.
So but Fannie is she private or government or still a hybrid?
It's a hybrid.
It's a hybrid.
It's still we still own it. They haven't sold it off, so we still own it, but they're trying to. We're still under government receivership from years. We're trying to get out of it, but it's still ours. It's our money.
So we have a lot more lower interest rates. We have more programs. We have down payment assistance. We have grants that everybody qualifies for. If you are waiting, the time is now, and I'm willing to go on record and say this: December 20th, date of recording, 2023. That now is the time. Now is the time. Get out there and buy the home because things have changed. So talk to your banker, talk to your local realtor, and make that decision if it's right for you.
Well, I think one of the things I'm hearing people like, well, I still want to wait till the rates come down some more. I'm going to use an example right now. You now could go and buy a house that half a point less on a $500,000 house. That's $250 a month more that you qualify for, which means that $250 a month payment on a house means you're now qualifying for 60, 70, 80. And that is something also, everybody that's listening to us right now, they need to go back. Hopefully they don't call me and you because you probably qualify more. Yeah, call me first. You probably qualify more than you did a few months ago. So I think that everyone needs to relook at getting, when I used to say, hey guys, you probably don't qualify as much now. You probably qualify for more. You do qualify for more. It's not a problem than what you got pre-approved for. So that's another thing. But the other part is you can always refinance in a year. And I've said this and said this and said this. If you're looking at saving, so let's just say rates go to 6.375 on a $500,000 house. That's $250 a month. And let's say that comes up, that means you're like $3,000 in savings. You got $3,000 in savings over the next 12 months. But let's just talk about your rent that you're going to pay for. Let's say the $500,000 house is $3,500.
Right, there's no $3,000 rents.
No, that means that's $38,000 that you just waste in rent over 12 months to save $3,000 in interest. So it makes no sense. Not counting the tax write-off you're getting, the appreciation. So I'm already getting that pushback of, well, the rates are there. I'm going to wait a little more. And then one more thing I want to say, and I'm not the realtor, but I am the mortgage professional, and I'm getting a little frustrated, and Milton can talk about this. I have buyers that still think it's bargain basement. And they're thinking it's 50, 60,000 on a house that's fairly marked, and they're losing out. I have a young first-time buyer couple right now that has lost out on 5 houses because they will not listen to me and the realtor.
Advice from a good realtor, you got to know what market you're in, right? If you're looking under $1 million, I would say it's very hard to negotiate anything, especially if the house is turnkey. We have an inventory of about 2.5 months under $1 million. You have inventory of maybe 4 months up to $2 million. Now, once you start getting into the 5 million and 10 million range, there's room for negotiation because the inventory levels are so much higher. But at that point, you got to pay somebody to sell it because we don't have that many desperate sellers. What you have now is you could potentially be the only one at the table negotiating. But if it's a good home and you like it, trust me, a lot of other people like it. And now we have a new flood of buyers coming to the market. So you're going to need to really be a little bit more aggressive. You act now, you can negotiate some. I've seen 2% off, 5% off. I've even some 10% off. But again, what market are you in? And be cognizant of what you're buying. Because if you're buying a project, if you're buying something that needs a little bit of work, yeah, you're going to get a discount. You're going to get credits. But if you're buying something that's turnkey, there's still 10 people per house.
Right.
You've got competition. I have a client who lost out on 2 different contracts. He contacted me and said, I want this home in this neighborhood. I found somebody that was looking to sell and we went into contract. That's an off-market deal. You know, he wouldn't have found that today if we didn't contact me directly, find a specific seller that works and that he wants to do a deal with. That's harder to do than if it's just on the market. And I even told him now, listen, inspection, appraisal, all that's, you know, about done. If you were to cancel this contract, there's 4 buyers for this particular home and this price point in this neighborhood. You know, when you want to be really specific, you know, it's harder for you to be choosy when there's competition. So his inventory is not like, there's no way for the United States housing market to balance so quickly without a dramatic amount of construction. And we don't even have the space for it in South Florida, let alone the workers, because the construction industry has been treated like a redheaded stepchild. And most of those guys are 40 and 50 years old, and there's not a lot of new construction workers coming. And that's making it even harder and harder to build at scale. And, you know, compound that with, oh, we've got hedge funds and institutional buyers.
Right.
If you are a Gen Z, a millennial, a younger American, and do not own a home, it's never been more fiercely competitive.
Yep.
So if you've got a window, take your window. That's my advice. I know a little, right? And happy holidays to everybody. And I'm wishing you a very happy new year as well in 2024. Kimber, thanks as always for coming here and having this discussion and really illuminating and bringing your wealth of knowledge to everybody.
Happy holidays. Thanks so much. Thank you.
No problem.
Bye.
Happy holidays.
Happy holidays. Bye.